I took a trip down to Florida to visit some of my family down there. And I remember just like waking up one morning and I remember like looking at my bank account and seeing that the rent was paid. And I was like, wow, I'm in Florida. I didn't do anything this month regarding the rental property. And I got paid, the rent. And I'm like, the light bulb went off for me at that point. I'm like, why am I not doing this, more often? And that really like kind of kickstarted me into, okay, I need to essentially buy more real estate.
As you know, obviously, about myself and other investors that are in our circle, so many people have started with a house hack where they were living in the rental property, renting out the other side or the other unit. And it's worked out so well for so many different people. And we've done this. I've done this on my YouTube channel and on the podcast before. We kind of covered exactly what house hacking is. So we won't belabor it too much, but I just want you maybe to define that for a second and also talk about how that has enabled you to be successful as a real estate investor and get into real estate, and also maybe touch a little bit on the tax aspect of it, because I know there are some particular tax advantages or uniqueness when you are living in part of the property and you're renting out the other part. Yeah,
absolutely. So we bought our first house hack in 2018. When I was renting at the time, I was still in college. I had basically told myself, why buy a single family house when I can buy a multifamily house, live in one unit, and essentially have the tenant pay the mortgage, offset the mortgage. So we basically found a house here in a little suburb outside of the Albany area, moved into the house. And funny story. So I moved the tenant in probably 2 or 3 months after we had purchased the property because the tenant side was vacant. And I want to say maybe like a couple of weeks went by. I took a trip down to Florida to visit some of my family down there. And I remember just like waking up one morning and I remember like looking at my bank account and seeing that the rent was paid. And I was like, wow, I'm in Florida. I didn't do anything this month regarding the rental property. And I got paid, the rent. And I'm like, the light bulb went off for me at that point. I'm like, why am I not doing this, more often? And that really like kind of kickstarted me into, okay, I need to essentially buy more real estate. So the big thing about house hacking that I have learned being a tax professional is the substantial amount of tax write-offs that you can get owning and living in a rental property. So when you live in a rental property and you are occupying one unit and you have the other unit rented out. So for example, any single property, whether it's a single family house or whatever the case may be, you have expenses associated with that property. Insurance, taxes, mortgage interest, repairs, maintenance, water, sewer bills, utilities, whatever the case may be. Now that you're living in a rental property, you can take those expenses that you normally would not be able to write off if it was a single family house and offset those things against the rental income that you're getting. So in theory, you really are kind of claiming income almost tax-free in a sense, because whether you lived in a single family house or you lived in a duplex and you rented out the other side, you're going to have those expenses regardless. You're going to have to pay for the insurance. You're going to have to pay for the taxes. You're going to have to pay for interest. So now that you're able to use those expenses regardless to offset the income you're getting, you can ultimately have essentially like almost tax-free income or, tax-free rental property income. To this date, I have not paid a single dollar in tax on that rental property income that I have generated from my duplex that I live in today. And a little side note too is, a lot of the things that you do at your property, if I had to buy a shovel, if I have to buy salt during the winter, if I have to mow the lawn, all of those things that you'd be doing as a regular property owner, as a single family property owner, you can write those things off against that income as well too. So not just like the major expenses, a lot of like the minor expenses as well too, which can really offset, you're almost getting rental income for free and not paying any taxes on it. So
right.
Capital gain tax, we briefly touched base on that. One thing I will note in here is if you are selling a property and it's your own personal residence and you have lived there for 2 of the last 5 years, up to $250,000 of that gain is not taxable. If you're single, it's $500,000 if you're married. Okay. And now people say, well, I'm selling my house for $300,000. I have to pay $50,000 in taxes. I'm like, no, it's from what you purchased it for, plus technically any improvements that you made, maybe some closing costs, minus what you had sold it for. So if you bought it for $200,000 and you sold it for $300,000 and it was your primary residence, that's $100,000 gain, and you're a single payer tax filer, then you would not be subject to taxes on that property.
Let me ask you this. So let's say that your rental income gross for the year was $10,000, right?
Okay.
And your combined deductible expenses that you just listed add up to more than that. Let's say it's $13,000. Is there a way to take that additional $3,000 and take it off your regular W-2 income? Is that possible?
Yes. Yeah. So the short answer is yes. If you meet basically one of the two criteria I had noted here. If you are a real estate professional, or if you make less than $75,000 a year, single, $150,000 married. And then there's some phase out rules too. So as you start to make so much more money, the limitations kind of trickle down on how much you can actually offset against your personal income. Again, probably sound like a broken record, but make sure you're talking with your accountants on claiming this status if it's possible, if it's reasonable or not. And but when I first got into real estate, I was not making over the $75,000. I had a single rental property, and I was able to take my $10,000 losses on my duplex and offset that income. And I got a lot of big refunds back from that because I basically overpaid them through my W-2 income. So it's definitely real estate can definitely have some major tax advantages for sure in that aspect.